welcome to my channel. And today we will talk about third semester assignments for the subject strategic cost management. This is applicable for December 2022 cycle, which is a regular cycle. So all the students enrolled in the month of July, August, and September of 2021 are able to view these assignments on your portal. If we talk about the assignments cover 30% of the stuff, as already most of you have given the first sem and the second sem, so you are pretty much aware that it covers 30 marks, where the marks bifurcation are into three questions: first, second, third, and third B. Each comprises of 10 marks, and the total word count which is acceptable is around 1000 words, plus minus 10% is acceptable. Two important concepts which I reiterate in each of my videos: one is the copy case and second is plagiarism. So don't ever share your assignments with anyone, because if two students have uploaded the same assignment, both will get the copy case. Second is plagiarism. So always try to write the content in your own words. Don't directly copy paste it from maybe Google, maybe an MIMS portal, NMIMS videos, or any other source. So try to create the stuff on your own in your own words. That's very important. If you talk about the strategic cost management subject, it's more or less a combination of a numerical and a theoretical based approach, wherein you need to solve few questions parallel. You need to write the theory as well. So this subject is more relatable to your first semester subject, finance accounting. You can relate it with the finance, and the second one which you can relate is marketing management. So it's a combination of both the things. And if you see the assignments, you can easily relate. If you have gone through this first semester in a very effective manner, then you will find the questions very easy and you can easily solve the numericals. And we can also we will see in our video that okay, this content needs to be mentioned, what content, what additional things which we can add to in each of the question to gain more and more marks. So let's start with the firstly, let's see the assignment PDF. So this is strategic cost management December 2022 cycle. These are the three questions. So if you see, the first question is a little bit numerical. Third question, again third B, is a bit numerical. So second and third is complete. Third A is completely theoretical. So let's see each of these one by one. So if we talk about the first question, so let's see about the first question. The first question is: the following information is available for the pen making business. Consider the following. Calculate the following: sorry, contribution, PV ratio, B ratio, MOS, number of pens sold to get a profit of rupees 20,000, sales of the pen for rupees 100 each, cost of refill 10 each, ink is 5 rupees 5 per ml. It's 2 ml of ink required for each pen. Ball bearing 3 rupees, sticker on the pen 2 rupees, fixed cost is 3 lakhs per annum. So if you see a normal costing of each pen, then there are few things like cost of refill is 10 rupees, right? Second thing is ink of 5 and 5 2 means 10 ml, so it's 20. Then ball bearing is 3 and sticker is 5, so 25 rupees per pen is required. 10 plus 10 plus 3 plus 2, and the fixed cost is 6 lakhs rupees, right? So I think you have already read in the first sem about the fixed and the variable cost. Fixed costs are the specific, it will be the fixed for any number of production. If you produce one pen, two pen, 1000 pen, or 10,000 pen. And if you talk about the variable cost will change as per the quantity, right? So now let's see what page numbers to refer, because you need to calculate all of these things which are being asked in the question, and it's pretty much straightforward. So you need to go to the page number 5. Quickly going to the page number 5, it's contribution. So contribution is basically the profit before the recovery of the fixed cost, right? So C equals to P plus F, values are being provided, right? Contribution is the total sales minus total variable cost, right? And or maybe you can say the total fixed cost plus profit. So this is the way you just need to give a brief about this. Then second part comes as the PV ratio. So for PV ratio, go to the page number 12. It's a profit volume ratio which specifies the change in the sales of the variable cost based on the profits. So, or you can say it's a C oblique S ratio, right? So it is always being calculated in the form of percentage, which is contribution upon sales. So these values are already being provided. Going to the third part, which is BE analysis. So BE is basically break even analysis. If you see, I think in first semester in business economics we have studied about the break even point, a threshold point or the basic point, after which the overall profit starts going in a different fashion. So if you talk about the break even point, so it's a point where if a firm intends to produce more to earn more profit when the increasing sales goes beyond the B level provided profit to the firm, right? So it's basically a threshold point, or you can say the maximum number of units which can be sold to produce a profit of zero, but at the same time the recovery of all the associated cost is zero in this case, right? So moving to the next question, next part. What's the next part? Yeah, if you still have doubts, and you can just refer to this point where sales is equal to the total cost. Firm does not have any profit at this level. The contribution is equal to the total fixed cost, right? After that, it will start increasing the values, right? Next is MOS. So MOS is on page number 10. So what is MOS? So it is again another important calculation for MVP analysis. So this is basically the sales level beyond the BE point from which actually the firm starts generating the profit. So break even is basically the starting point. Post that, whatever be the sales, it will be counted as a part of your profits. So this is MOS. The full form is margin of safety, which is actual sales minus break-even sales volume upon actual sales into 100. Values are already being provided, so I'm not going into in details of calculation all these values. You can see the for the first question, you only need to just go to from page number 4 5 to page number 12 or 13, means initially 6 7 pages. I suggest to just read all the content once, because all these stuff are interrelated. You will get a better understanding. Moving to the second question, select the financial statements of any listed company, explain the use of and calculate any five ratios, analyze. So, firstly, it's being asked select. You can choose. You can just go to internet, go to money control, or you can use any of the website to just download the balance sheet, or you can say the profit and loss statement. Maybe you can choose TCS, Infosys, or any company based on your understanding, or maybe the current company in which you are working. There's no fix that you need to choose a company from the FMCG sector, or finance sector, or IT sector, or telecom sector. You can choose any. Maybe it's a small firm, startup, new, existing firm, doesn't matter. You just need to calculate couple of ratios. So for this, you need to refer to page number 215. In 215, it's mentioned about the balance sheet. So initially, just give a brief about what is balance sheet, because this is the core and it's a 10 marks question. So it's important to give an overview about what is the balance sheet. Then next part comes on the page number 218. Going to the page number 218, which are the ratio analysis of the financial statements. These are ratio analysis, trend analysis. You can just mention one or two liners. And the actual part comes from the page number 220, wherein you just need to interpret and specify those ratios. Like the very first one is the current ratio. So current ratio, because you are having the balance sheet, you might be having the current assets and current liabilities. So you can say the current ratio is the current assets upon the current liabilities. The second part comes as the, so you can specify any five. Debt equity ratio, which is total debt upon total equity. Operating ratio, it's the total expenses, and after that whatever the sales, so total expenses upon sales. Profit margin ratio, net income upon sales in the form of percentage. Inventory turnover, the cost of the goods sold, COGS, which we call as COGS, and divided by average inventory. Recoverable turnover, which is credit sales upon average accounting receivables. Solvency ratio, which is shareholders or stakeholders fund upon the total assets, the percentage part. Interest coverage ratio, net income plus overall interest expenses plus overall taxes on the income, divided by the interest expenses during that year. Debt service coverage ratio, which we called as DSCR, which is profit after tax plus depreciation plus interest on the loans upon interest on the loan, um, plus annual principal repayment, or they're having other ratios, PE ratios and EPS ratios. I think you have already been studied in the SAM first from in finance subject. So maybe you can use any of those, or you can use these five, choose any of these five base, and you need to show it in the form of the calculations for that particular company for which you have uploaded that balance sheet. So yes, you need to copy paste that balance sheet into your Word document. Then the third question, third we are having two parts, third A and third B, 500 marks. So we are not going to specify a lot many things into third questions. Explain what is meant by the product mix analysis. What are the considerations uh, to made in the product mix decisions? It's product mix which I think you have studied in the marketing subject in SAM first. You can refer to that book as well, or you can just directly go to the page number 134. It's a product mix. So product mix is basically when the same company is producing n number of goods in the different sectors. The best example if the is the FMCG sector. If you talk about the Hindustan Unilever, or maybe the ITC brand. So they are dealing in a number of sectors, and number of household products, ranging from low to the high as well. So you can just specify any of the example if you need so, and you can give about the specify about the product mix decisions and its analysis. So third A question is clear. What are the considerations? Again, you can specify from that only. Then the third B is a numerical one. The Sanjay is the owner of the SSR Private Limited. He needs to item A for his business. He can buy the item at 50 rupees per piece. Alternatively, he can produce it in house. His accountant produces an estimate of the cost of the production for the item. Basis on this, he advises that Sanjay not to produce the in house. It will be a costlier one. Comment on whether the accountant is right or wrong. Support with the analysis. So it's just direct material cost, direct labor cost, the power cost, rent on the factory, and depreciation of the plant used in the manufacturing A. Right. So if you see, we need to specify two things. So going to the page number 127. So firstly, we just explain a little bit about the relevant and the irrelevant cost. Because if you see this particular things, then definitely material is important. Material, labor, power cost is important. Rent, depreciation, those seems to be a little bit irrelevant things. So it's important to specify about the relevant and the irrelevant cost, not in detail, but yes, you can just give four or five liners about the relevant and irrelevant cost. And after that, going to the page number 130, you just need to specify about the concept of the outsourcing decisions. Outsourcing is basically a concept when you are not building it on your own. You are just giving it to the third party to prepare, because you are getting it at a cheaper prices. So the question is all about the outsourcing decision, which his accountant, uh, based on the calculation of accountant, Sanjay needs to decide. I think the person name is Sanjay, if I'm not wrong. Yes, so Sanjay, yes, he's the owner, right? So if we calculate the stuff, because in the question it's clearly being asked that okay, whether the decision of accountant is correct or not, and support with the analysis. So there might be a single line and answer that okay, it's yes or no, and you can show the calculation. But it's important to just give a brief about the other stuff, like we have discussed about the outsourcing decision. So you just specify a brief about this. And if you see the value, so the direct cost is 20 rupees, 20 plus labor 10, 30, 30 plus power cost is 535, 35 plus 18, that will be coming as around 53 rupees. 35 plus 20, 30, 35 plus 18, yes, it's 53, and plus 6 rupees, it will be 59 rupees. So if you produce it in house, it will cost you 59 rupees per item, like for per product A. per piece. And if you go it for the third party, you are just get it from somewhere else, then it will be 50 rupees. So for each item you are saving 9 rupees. So this way you just need to explain that okay, in house it will cost you 59 rupees, and if you get it purchased from somewhere it will 59 rupees per piece. So the decision which accountant is suggesting is right, and Sanjay should go as per the decision of the as per the calculation decision of the accounting. So this way you can specify about the third B question. So this is all about the all the things which we have covered. And if you have any doubts or facing any issue, feel free to connect to me at ngasc.mba@gmail.com. If you like this video, do like to subscribe and stay connected for further videos. Thank you so much.